The transition period ends on New Year's Eve and a trade agreement with the EU is not yet in place. Why UK stocks are interesting right now is the topic of this video. Keep calm and carry on. The saying with which the British government wanted to prepare its compatriots for war in 1939 is not only a household word on the island today. Keep calm and move on. Boris Johnson currently has every reason to lose his cool. The British Prime Minister is fighting against record high numbers of corona infections in the country and is himself back in quarantine after contact with a parliamentarian who tested positive. His most important advisor Dominic Cummings resigned after losing power struggle with Johnson's fiancée Kerry Simmons. And there's also Brexit. If no agreement is reached with the EU in the remaining weeks up to New Year's Eve, chaotic trade relationships threaten with the end of the transition period from that day. However, there are some indications that the no-deal Brexit, or if you like the other terms, an Afghanistan-style Brexit, will not come. And investors can calmly take advantage of the investment opportunities that arise in the United Kingdom. The best time to invest can be when it feels most uncomfortable, said Richard Caldwell of fund provider Columbia Threadneedle Investments. He believes UK equities are on the verge of a strong rebound. Caldwell points out that the stocks have outperformed stocks in other markets for decades, among other things because pension funds withdrew and hedge funds bet on falling prices. Even after the corona crash in spring, their prices would not have recovered as strongly as stocks in the USA, emerging markets or other European countries. Caldwell prefers a broad diversification. In addition to companies from the leisure, travel and retail sectors, which suffered particularly from the Brexit and the pandemic, he continues to rely on companies that have shown resilience, for example from the pharmaceutical and food retail sector. In addition, Caldwell believes that small and medium-sized companies are interesting. In the event of a recession, they would initially lag behind the overall market, but then do better for 2 or 3 years. So we are approaching a very interesting point in the cycle for this specific market segment, says Caldwell. A look at asset managers' multi-year forecast shows that British stocks are likely to be a lucrative investment. In their 10-year outlook, the DWS experts expect an average return of 5.9% per annum with British stocks. German stocks promise an annual return of 4.1%, US stocks 5.3% and emerging market stocks 5.6%. Such long-term forecasts contain uncertainties and are unlikely to come true down to the decimal point. However, the tendency of the statements provides important information for promising investments. The DWS forecasts are in local currency. In the longer term, exchange rate effects often cancel each other out. In short term, they can have a significant impact on earnings. For the past 12 months, an ETF on the London benchmark index FTSE 100 has posted a minus of 9% in pounds. Due to the weakness of the British currency, it is minus 14% in euros. Currently, around 90 pence must be paid for €1. Analysts expect a slight appreciation in the next few months, but they rate a hard Brexit as unlikely. And that is the point right now that it's getting more and more likely. Should the no-deal Brexit, or the Afghanistan-style deal, come after all, in addition to falling share prices, a devaluation of the pound would also be expected. At the beginning of 2021, more than £1 per euro would have to be paid, warned the DZ Bank analysts. In their main scenario, however, they expect an agreement even if the negotiations could drag on. In the meantime, one must assume that a deal will not be announced before the end of the year. The list of deadlines set and passed by the British or Brussels for an agreement is long. It was recently reported from London that a trade deal could be in place by the beginning of next week. The media on the island are already pointing to an emergency plan according to which the European Parliament could meet on December 28th. The MPs who would have to ratify an agreement actually want to meet on December 17th for the last time this year. Fishing rights are still central issues, and London should not give domestic companies any unfair advantages over EU competitors. There has been little progress in the past few months since the British left the EU with an exit treaty at the end of January and the transition period began, in which the old rules still apply. Rather, Johnson's Single Market Act created additional dispute on one point that was considered resolved. According to the withdrawal agreement, goods imported into Northern Ireland from the rest of the kingdom are to be inspected on the Irish Sea before they are imported. This ensures that no customs controls are necessary at the border to the EU member Ireland. From the EU perspective, Johnson is trying to circumvent this regulation with a law. The House of Commons approved the project in September. The House of Lords, in which the government does not have a majority, rejected it. This could be a welcome way out for Johnson. He cannot simply withdraw the law without completely forfeiting his credibility. The option to let talks with the EU fail because of this and to conclude a trade agreement with the USA is a thing of the past. The US with Joe Biden, who likes to point out his Irish origins, would not agree to an agreement if the peace process in Ireland is jeopardized. The warnings from US President-elect Joe Biden about the need to avoid a hard border on the island of Ireland gave the talks new momentum, said UniCredit economist Daniel Venazza. He assumes that the British and the EU will agree on a fundamental free trade agreement by the end of the year. The fact that both sides now want an agreement speak in favor of it. The last comments from Ursula von der Leyen are not that optimistic. The departure of Johnson's advisor Cummings and his head of communications Lee Kane, both once driving forces in the Brexit campaign, will contribute to this. The history of the relationship between the UK and the EU, only the most important points I brought up in several videos already, would be one episode richer now. And following the advice mentioned at the beginning would have paid off. Incidentally, posters with the slogan were printed before the war, but not used and only rediscovered many years later. And that brings me once again to that point, this war terminology that's used either by the government or by many people from the pro-Leave side using in the comments is completely out of line. And if you now want to know more about Brexit, YouTube has chosen another of my videos right here for you on the end screen, next to the subscribe button I hope you used. If you want to know more about European or global news and politics, those two channels are right up there, so visit me there too. I'll see you in my next video. Click and enjoy. Viel Spaß!